Do you really know how interest rates really could affect your retirement savings? If you're still kind of wondering about that, then you need to stay tuned to this educational video today, because what we're going to do is shed some light on how interest rates can positively or negatively affect the U.S. economy, the stock market, and your investments. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And the reason we've created these educational videos is to make the difficult and stressful process of retirement income planning simple.
Absolutely, Andrea. And we do this by incorporating a team of expert advisors ranging from certified financial analysts, certified financial planners, estate attorneys, insurance advisors, and other needed professionals to help us build a fully written retirement plan that's going to let our clients know when, where, and how to take money from their retirement savings.
For the best retirement income planning advice, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
So Andrea, the rising and the lowering of interest rates can play a major role in slowing down or stimulating the economy. In theory, the lowering of interest rates should help boost the U.S. economy by encouraging people to borrow more and spend more. So when interest rates are low, consumers and businesses are more willing to make larger purchases. So higher interest rates actually slow down borrowing and spending and can restrict the flow of money going into the U.S. economy. So what we're going to cover today in this short educational video is how interest rates could affect your retirement income. But before we do that, there are two rules to retirement income planning that we always give you. And what are those two rules, Andrea?
Well, rule number one is to never run out of money, and rule number two is to never forget rule number one.
So let's talk about the impact that interest rates can have on your retirement income. So let's go ahead and dive into talking about what particular products could be affected by any type of interest rates movements. So, of course, we have student loans that can be impacted when rates are actually changing. Home mortgages, of course, we're seeing that now in this low interest rate environment. A lot of people are refinancing their homes, and it's really critical that you do that now because we don't know if rates can even get any much lower. Also, credit card interest rates, savings accounts, and CDs. Unfortunately for savers, this can have a huge impact in a low interest rate environment, and auto loans, of course. So when it comes to low interest rates and how it affects the economy, what is the primary goal when they actually decide to lower rates like they've done here recently? Well, the main goal is actually to boost borrowing. That's what they want people to do. They want people to actually borrow more money. So if you do that, it's going to stimulate the economy because if you're borrowing more money to purchase things like a home or also like cars or other big ticket items, this is going to help boost the economy in a major way. But of course, in my opinion, low interest rates are really not that good for people who have assets, but it's really good if you have liabilities because when the rates are lower, it's going to be lower interest on that debt that you have to pay back. So really good for people who have liabilities. So let's go ahead and talk about the relationships of interest rates and bonds. Interest rates and bonds have what they call an inverse relationship. And what that particularly means is that when interest rates go down, bond prices actually go up. But as I mentioned, in a low interest rate environment, it is really bad for savers, people who actually are looking for fixed income from assets such as CDs or bonds or annuities or just sitting in cash. When interest rates are dropping like they are now, near zero level, it's really bad for this type of situation. So let's go ahead and take a look at this particular example here and why I say that. Let's say you had this bond or CD and it was $1 million and it actually had an interest rate of 3%. From this particular account, you can actually withdraw $30,000 a year. But let's say that we're in an environment like we're in now, where interest rates have dropped pretty much to zero, but let's just say interest rates are at 1%. That same $1 million that you were able to get $30,000 a year from, you're now only able to achieve $10,000 a year from that same retirement account. You would literally have to save 3 times as much, $3 million, in order to achieve the same goal that you had with $1 million. Yikes is definitely my sentiment exactly. So what do people turn to when we're in an environment like this? Well, some investors may look at things like gold or other precious metals in order to try to get more yield. Also, large cap stocks, which pay a dividend, may be an option for some people. Also, people may look at taking a little bit more risk with their bonds by going into more corporate bonds, high grade corporate bonds. That may be an option for you. But one tool that I think a lot of investors are not really aware of, because perhaps their advisor is really not a fiduciary or serving in a fiduciary capacity, are a little tool known as a MIGA. MIGAs are multi-year guaranteed annuities. They're very unique. And I've talked about this on other videos, so you're definitely welcome to go check that out as well. But interest rates on MIGAs are typically 3 to 4 times the rates that you will see on CDs or other low interest options. So that definitely may be something that retirees may need to start looking at in this low interest rate environment, because the Federal Reserve has really indicated they're planning to keep rates low for an extended period of time. So I really hope that this information was beneficial to you in helping you understand exactly the impact that inflation can have on your overall retirement income. If you have any questions or comments that you would like to make about this information, please leave them in the comment section below, and please do not hesitate to get in touch with our office.
To learn more about our services and how we can help you to increase your chances of not outliving your retirement income, make sure to click on the link in the description below and sign up for our free Maximizing Your Retirement Masterclass. After this video, check out our other videos that we've created that will give you tips on how to maximize your retirement. Also, if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.